Do you know what is India's most missold product? Throughout the last multiple decades, banks, financial institutions, and even your favorite LIC agents have been pushing innocent customers into making major life decisions just for the sake of making bigger and bigger profits. So in the fifth video of MarketFeed's personal finance series with me Ajay Ajit, let's discuss everything you need to know about life insurance. So first, let's discuss what is insurance, the most missold product in India. Insurance in its core, it is a product, it is a tool that will help you protect yourself from any unplanned losses. You might all be having a car insurance or a bike insurance under your name because it is mandatory in India. And what happens when you bump your car against a wall or against another car? The insurance company comes into rescue and they'll pay whatever bills for all your damages. And in turn, all you have to pay them is just a premium to cover this insurance for you. So I would say in concept, it is a very noble thing to do, because in the case of an insurance company, they're helping you in certain hard times of your or hard phases of your life by giving you financial assistance. And when you're talking about the business side of it, it's basic probability. Imagine 100 people take car insurance in a city that you're living in. And what is the probability that all 100 of these people will ever need insurance? What is the probability that all 100 might even go into an accident in the first place at all? So by doing all these calculations, insurance companies come up with a premium. So all you have to do is to pay this premium to the insurance company, and they'll be giving you a cover worth multiple, even hundreds of multiples worth this premium amount. So the company takes premium from hundreds, thousands, lakhs of customers into their own bank account, and they invest this intelligently into various assets including the stock market, and they try to make returns from it. And with this large pool of money that they have, in case one or two customers need a payout at that time, they'll go ahead and give you that sum assured for the insurance. So this is a general concept of an insurance, and I'm sure you might all be knowing this because this is how it works for the car and bike insurance. So what is life insurance? Similar to a car and bike insurance where you're insuring certain assets, in a life insurance policy, you're insuring a person's life itself. The insurance company will give a huge payout in the case of a person's demise to his or her nominees. So the concept here is that in the case of such a sudden demise, the family will not have to compromise on their lifestyle, their education, their basic needs, nothing of that, because they'll be getting a huge sum from the company and they can sustain their lifestyle, all for just in return of a small premium to the company. So the first question you would have for me, hey, that sounds like a cool concept. I want my family to not have any issues in the case of my passing away, and I want to take this life insurance for myself. So the question comes to, who should be taking life insurance in the first place? Primary breadwinners of the family are who need life insurance in the first place, and that is it. Someone who has multiple dependents under him, and someone who has maybe liabilities, certain loans to take care of, and has no passive income that can sustain his family's lifestyle. This is who would need a life insurance in the first place. But also someone who's aged between maybe 25 to 30, who might not have dependents right now but plans to build out a family in the future, and he or she might also need to take life insurance because they can enjoy the lower premiums because they are younger at this age. So if you have certain plans for a later age also, life insurance can be a good product for you. So now the question comes to, what is the best life insurance for you to take? This is where a lot of mis-selling happens in this industry, because there are multiple types of insurance products, and because it's a high margin, high commission product, often the worst products are which get sold the most. And let's break that all once and for all today. There are 4 different types of life insurances that you should be knowing about. One is term insurance, the second is whole life insurance, the third is endowment plans, and the last is ULIP plans, unit linked insurance plans. So out of all this, I'll make it very easy for you. The one you should go after is a term insurance plan. Term insurance, as the name suggests, insures you till a specific term of your life. This means that if you're taking this insurance policy, you might be insured up to a certain age with can be 60 years of age, 65 or even 70 according to your preference. And the reason that I say a term insurance is all you need is for two simple concepts that I'll quickly explain to you. So the first concept that you have to understand is a concept which we discussed earlier, which is you being the breadwinner of the family. Here it says that you're the breadwinner of the family. You're bringing in most of the income into the household, and only in the spirit is when you need a life insurance policy. So by the age of around 60 or 65, you might most probably be retired and living a peaceful retirement life. Do you have much dependence then? Your children might have jobs of their own. You might have your own retirement plans and your own retirement corpus build up for yourself. So why do you have to take an insurance policy up till the age of 100 in the first place? Just think about it. And the second concept is a concept of time value of money. Now suppose I tell you, I'll give you 1 lakh rupees today or I'll give you 1 lakh rupees after 10 years. Which one would you choose? You would obviously go with the 1 lakh today option. Why? Because you understand that this 1 lakh today has much more value in the real world than 1 lakh 10 years later. Similarly, you can think about it. If you're taking a 1 crore cover for your life insurance policy, what is the probability that it would be a good cover or it would be a good amount at the age of 60 or 65 for you? And compare it to the age of 90 or 100. When your family gets at 1 crore at that age or at that year, it might not even be worth such a big amount. And oftentimes the insurance premium which you'll have to pay until the age of 60 would be around 1500 rupees. And on the other side, if you want to take a whole life insurance premium, it would be around 3000 or even 4000 rupees. So if you imagine that you're investing that extra 1500 rupees into an asset like a mutual fund which could give you 10% return, it can give you multiple crores by the time you reach that age. So one, you might not have dependents or you might not need a life insurance policy after a certain age at all. And two, the concept of time value of money, where this life insurance amount might not be worth a lot when you're 100 years of age. And also this extra premium could have been invested somewhere else properly. So in this ultimate guide to life insurance in India, let's get to the next point, which is how much cover would you need for your life insurance policy. So if you want just a general thumb rule, I would say 15 times your average income that you're earning currently is what you'll be needing as a life insurance cover. But this would vary a lot depending on who the person you are. You'll have to sit down, you'll have to assess how much equity that you have, what are the current assets and liabilities that you have in your own life right now. Do you have any debts? What are the EMIs being paid every single month for that? So you'll have to calculate that as well. And how many dependents that you have. Do you have multiple children or even parents to take care of? And this will all affect your decision to take the ideal cover for you. And after calculating all of this, the amount that your family will need to sustain for 15 years of their life is generally what I would suggest you to take as an insurance coverage. So maybe you're someone with a huge income, but most of that income is currently being saved into certain assets and your expenses are not that much. In that case, you can modify this rule according to your needs and you might only need to take a lower life insurance coverage, not this 15 times your annual income that I was talking about. But say you're someone with a huge home loan EMI, that home loan alone is worth 1 or 2 crores. You might have to add that into your insurance coverage as well. In short, the coverage amount should be enough to cover all of your liabilities and sustain your family for a period of 15 to 20 years without having to worry about inflation also. And don't worry, certain insurance policies also allow you to increase your coverage once you hit certain milestones in your life. This might be you getting married, this might be you having kids, and in certain cases like this, you can increase your coverage as and when needed. So now that it's covered, let's get into the next most frequently asked question about life insurance. Which company should I buy from? These are the top listed companies for life insurance in India, and I can confidently tell you that all of them have a near similar claim settlement ratio. That means out of all the claims that they get, they all settle nearly the same number of cases that they get. And out of all these names, any name that you go by should be generally fine is one thumb rule I can give you. Since this policy is something that you'll be taking for multiple years, maybe 10, 20, 30, 40 years, I would suggest you go with a trusted listed listed company like one of these from the list and not go after any startup companies for that sense. And make sure you read the terms and conditions of any insurance policy that you get, even if it's from all of these companies. They too have good insurance policies. They too have bad insurance policies as well. And as I told you earlier, these bad insurance policies are what usually gets suggested or sold to you the most. So make sure you take care of that. So if you've got to this stage of the video, you're very serious about buying a life insurance policy and you've looked into various plans and offers that you have for yourself. And here we'll get into the next section, which is add-ons and riders for your insurance policy. And when we are getting into add-ons, I would suggest two major add-ons that everyone should add to their life insurance policy. One is waiver of premium when a critical illness is diagnosed. This would mean a certain condition in your life where you might not be able to pay any additional premium to the company. In that case, if you take this additional rider, you would still have the same life insurance cover up till that certain age which you have blocked till, but also you would not have to pay any extra premium for the additional months at all. You would continue to have the same life insurance policy up till the very age which you have blocked it till, and you would not have to pay any premium for the rest of your term insurance policy, so that you can continue to enjoy the benefits and you would not be forced to pay any additional premium as well. Now, the second add-on or rider that I would suggest everyone to take is a cover against critical illnesses. These cover most critical illnesses including cancer and even paralysis, and under the case that such an instance happens in your life, imagine you have not passed away, you have your entire life in front of you, still you should be able to sustain your family as we have discussed in the first place, right? So an additional cover, maybe even for the same amount that you have your term insurance cover, it would definitely help you live a more peaceful and happy life. So here, if you're someone in your 20s, if you want to take a term insurance up till the age of 60, the premium that you'll have to pay for a 1 crore cover is around 1,500 rupees per month. And if you're adding this critical illness and accidental coverage as well, you might have to pay an additional 1,500 rupees per month. But again, going back to the previous logic, this is something that you should definitely have in your life insurance policy. And here I would give you specific riders to avoid also. Do not try to go for certain plans which might even give your premium back at the end of the term, or even limited pay as well. So again, with the same concept of time value of money, this premium back plans are never good generally in the market. And also the concept of limited pay, which says that you might have to pay the life insurance for only a period of 10 years, but you'll have to pay a premium of 3 or 4 times. That is also not generally good, because that same amount could have been invested some other place and would have given you much higher returns. So the next section we'll get into is to how to avoid rejection for your insurance amount. Here the major thing that I've seen is people lying in their medical records. The first major thing that an insurance company asks you when you go to take an insurance is, are you a smoker? And all companies have their own definition of who a smoker is. If you have smoked in the last 12 months of your life, some companies might call you a smoker, and some companies might take it even for a larger portion as well. So if you're a smoker and then you lie about it when you're taking an insurance, it might cause you a lot of trouble and lead to rejection of your policy. So do not lie on your life insurance application, and also at the same time, make sure all your medical records are kept with yourself. You have certain printed copies with yourself which can show you when you visited your doctor, when you were diagnosed with major illnesses, that this illness was diagnosed after you took the policy, right? These all minor things are where insurance companies generally tend to reject the most number of claims in. So make sure you are protected yourself against that. And yes, there is a 3-year rule which says that the insurance company is liable to make sure that you have not lied in the records within 3 years. So after 3 years, anything happens to you, the insurance company is supposed to pay out. But don't take this for granted and make sure you have all these records in place. And even if you're a smoker, if you lied after 3 years, this rule is not valid for you. So never ever lie to your insurance company if you are a smoker. Now, another major thing that a lot of people will have concerns about, will this huge sum be misused by your family? Once your family gets it 1 crore or 2 crores in the bank, how would they manage that money intelligently? So the easiest thing that the insurance company offers you is a monthly payout option, which gives you the option of splitting that big paycheck into multiple monthly payout. But again, if you're aware of the time concept of money, never go for this option. Only go for this option if you truly believe that your family does not have the financial intelligence, the financial knowledge in the first place to handle the life insurance amount. And if you're someone who is worried about how this big insurance premiums might affect your monthly income, the government through the section 80C for life insurance and accidental insurance, they give you tax breaks up to 1.5 lakh rupees every single financial year if you choose the old regime of the tax system. This means that if you're in the highest income tax slab, you can save up to 40% on your insurance premium because the government will cover that for you in your final tax bill of the financial year. So then let's get to the conclusion. Here the question is, should you do all this in the first place? Should you be concerned about life insurance, health insurance, anything at all? And here I would say just one thing. If you're someone who wants to be financially responsible, and if you want your family and yourself to be sustaining in the same lifestyle in the case of an accident or even the case of you passing away, you should definitely have a life insurance policy. So do not think of this as an investment. Think of this as a proper risk mitigation tool which can help your family sustain for multiple years without any drop in quality of life. So that's it for this video, guys. Everything that you need to know about life insurance in India. Make sure you hit the like button, you share this video with as many people as possible, and that you subscribe to this channel as well. This is Ajay signing off. See you all in the next video. Till then, bye bye.